Morning traders, welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting the lab today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time, and I appreciate and welcome all of you to the Traders Lab. This stream's about integrating Bookmap order flow tools with auction market theory using a volume profile in the intraday developing time frame. It is based on 60 PDFs of structured trades that are available to everyone in the Bookmap Discord Trader Lab community, as well as a library of webinars on the process you're going to be seeing here today and every day. In addition, I'm going to post in the YouTube chat a link that is appropriate for today's market behavior. We started the day out in what's called two-sided trade or rotational trade. And that is called mean reversion. And we'll be talking about that today and what it indicates and what process or plan might be deployed or developed to attempt to get in alignment with it. And like everything, you have to vet all ideas that you hear from anybody, including from the Trader Lab. General disclosure of Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please grab a pen and paper, take a couple of notes, statistics, etc. Also, I'm going to post this link for you guys in YouTube so you can take a look at it. So let's see if I get the right one here in the chat. I'm going to take a shot at this. Hopefully it's the right one. Okay, guys. All right. So now today, let's just get in today. And I always say, and I'm very, to be transparent, that these are tough days for me. Mean reversion, I think, can be difficult because what is difficult about it is anticipating it and then trying to identify outside edges. Like, in other words, if we go into two-sided trade, where's the outside? And you can attempt to get in alignment and take more I take more stops in this context than I do in others until it changes. So I always put it this way: it's just not a favorite condition for me. My expectancy, unless I can get in a good location, trying to get in that position works against me until I kind of get it. So it's just one of those things I continually think about, work on, and am trying to get better. So today we're going to talk about statistics, first of all. So we open. Now the settlement from Friday is here. Yesterday's or Friday's high is here. So we opened, which is there, RTH opened, higher inside of yesterday's range. Now there are specific statistics that can be deployed, and like everything, you guys have to vet these for yourself. And the other thing about a statistic is it is merely a statistic. It's not a prediction. The thing about statistics is that while they have a probability of happening, since the nature of the market is random, in other words, we don't know if it'll get it to a statistic, how, when, or anything. So we know they're out there, but it doesn't necessarily solve the issue of randomness and uncertainty. But we can use them if we can perceive alignment with a trend, if you will, that develops. We can aim towards something. That's where statistics have value. So I'm going to give you some statistics, make a note of them, and then we'll go from there. And it's kind of important. So the overnight volume point of control in this configuration, that's this. This is the highest volume during the ETH, has an 82% probability of getting taken out. The previous high or low has almost an 82% probability of getting taken out. Now, don't forget, we opened here. Okay. Now it gets more fun, of course. There's approximately a 72% probability we'll get there overnight mid. The previous point of control has about a 67% probability of getting there. So you could see we're kind of getting our things going here. So the ETH high or low, either one of them, has about a 93% probability of getting taken out, and the first hour's high or low has a 97% probability of getting taken out. Now, let me just zero in a little bit more. Standing alone, the ETH high has a 69% probability of getting taken out. The first hour's high, which is the IB high, has a 67% probability of getting taken out. So that kind of gives us a lay of the land. We want to get north. So the trend is up. I think we can agree on that. So we want to favor the long side. However, and this is where the joy of it being in a random environment comes in. The market is long, which means we've had the last 2 days, we had a gap. Then Thursday we ran higher, Friday we ran higher, and you guys have been following stream. We've been on the long side, right? However, the market goes through transitions. And here's something else to make a note of. The market goes up to go down, and the market goes down to go up. And what does that really mean? It means that even if the market's going up, we can rotate and take weak longs out. It also means that if the market's going up, we can get sellers who will take profits. And then the market can go down and feed on those sell stops. So that is something we always know in the Trader Lab. So the thing we don't know is the same thing you don't know. Will it happen? When will it happen? And all that. How will it happen? We don't know what will happen. So when you're in an environment of uncertainty, you need to kind of think about the possibilities. And in Trader Lab, we have trade plans for different possibilities. And this weekend, and I posted this in YouTube, by the way, there's a link up in there right at the top of the chat, and it's on mean reversion trading. That is rotational trading. It's a separate plan. How do you recognize the transitions? And how do you trade the darn thing? And I find, again, I always talk about this. I said, it's hard. It's hard for me because I can't identify where an outside edge is. I mean, is it here? And now market goes straight up? Or are we going to rotate, come down, come back, go lower? You know, it's that kind of thing. So I have a hard time with it. I don't mind telling you that. I just take more stops in it. Because, and the reason I do is because I'm trying to find an outside edge, and getting that outside edge, wherever it might be, is difficult. So I have a couple of things to think about. So now let's talk about, and by the way, I also posted on Friday in the Trader Lab 5 opening structures that can be used, and you're all invited to Trader Lab. There's no cost. There's a link in the bottom of YouTube if you're visiting. 5 opening structures to help you see a trigger in the opening rotations, and they're based on 5 waves. Just saying, it's not that material to what I'm going to be discussing today, but everything, at least the way I operate, needs to be done before the market opens. So we don't know what the market will do, but you need, as a professional developing career trader, if that's your objective, to know what you will do. It isn't made up when the market is developing, because you're going to be in a state of stimulation, fear, anticipation, adrenaline. All this stuff's going to be going on in your head. Fear of missing out, all that. The only way to deal with that kind of emotional state is to have all these pieces developed outside of that moment, so that when you come to trading, you can open your trade plan. And this is what we do in Trader Lab. And then you know the open, what the possibilities are, You have your structured trades that have an edge because you vetted them, and you wait for your trade. And if your trade doesn't show up, that isn't your trade. There are many trades that will show up during the trading session. And if you're in Trader Lab, you have the opportunity to replicate and reverse engineer those trades so that when they show up and you have an edge for that specific situation based on the work you've done to determine whether or not you can actually have an edge per your personal plan, then you execute. So that's how this works. And then the outcome is still random because we're in a business of gaming or randomness, just like casino. So this is the casino business. Probably didn't think you were going to be in the casino business. So let's look at this. RTH open, which is right there, and targets here, here, and above, and the possibility to come down to the overnight mid and the naked volume point of control and settlement. So we're opening in the middle and we're in an uptrend. The market is long. I consider this a higher risk scenario because of where we're opening. Look where we're now. Let me tell you what the language of the market is. And I'm going to spend a little time because how do you interpret all these things? Well, there's yesterday's high, Friday's high. We had some profit taking, but not a ton. Friday's highest volume price was here. So that's like a retail price from Friday. Just think of high volume when you shop. That's how volume profile works. And in the ETH, this was the highest volume, right by yesterday's high. That is suggesting upside. However, if our open is in the middle between here and here, it's possible we ping pong. And all I can tell you is possible. So then I'm thinking, if this is the open, sell stops, in other words, buyers who got out on Friday, maybe, are going to get back in. Those who have been sitting and on vacation and missed the move up the past couple days, and we're in a bull market and all that, are going to want to get long. Now, there's also longs already in the market. So we know there's going to be stops. And if this is the opening swing low, which I marked, then there might be stops under the opening swing low. Logical, right? So let's look. What happens? We open, RTH open. This is called developing volume point of control. Think of this yellow line like a retail price. And all this is volume based. I don't use indicators. So for me, it's on the volume because this is where most of the trade is taking place. And this is micro structure and micro time frames. Very short time. I mean, we're in here not even a minute yet. Okay. So, and there's my buyers. The developing volume point of control shifts here. I'm going to mark it. I call it a variable high volume node. I made these terms up. They didn't exist when I started doing this. So, you got to get creative. So variable high volume node. Why? This is high volume and it's moving around. So it's variable. So I'm marking, think of it like in the store where the price was here. And now in this moment, the price is higher and you can't buy it here at the moment. Doesn't mean the market won't come back. Doesn't mean anything. But let's watch. So market's up. I get VPOC migration. In the language of the market, this might be saying that this is too low. We're going to mark it. Variable high volume node. Let's just keep going. By the way, if you have questions, please post them. I'll do my best. I can't see them while I'm narrating this. What's important, the reason I do this is because how do you stay in alignment with the market? For me, I don't use indicators, so I actually read the language. So here's what I know. Too low, retail, and I know this has about an 82% probability. So I'm thinking, well, if this is too high, if we get through this, we can take out yesterday's high. It's a target. If I get here and I bounce off it, I can come back here, or anything can happen. So I'm not doing anything at the moment. So right here, I'm looking for the opening swing low to get taken out. Before I can take a long, I need this to come out. So I kind of sit and I wait. And of course, emotionally, when I see this and this shifts higher, I'm thinking, gee, you should have got long. you know, and what is that? FOMO. So I come out, I take out the opening swing low. So right here, now this is what I'm waiting for. I take out the opening swing low. I get my volume here and here. So I'm going to label this. I want you to see process now. So this is where the high volume is here. Now, the objective here is to get long. Here's where it is. Right here, the variable high volume node. So I have up, 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 and I know where my opening swing low is. I cannot do anything. I come down here. Now, right here, I'm looking at this, and I know that I have to get, actually, I took this one right here. Let me explain this one to you now that I remember, because I'm thinking about the other one. I took this one, and I'm going for this because of an 82% probability. So I got long in here. Did not get anywhere. Going for this. Come outside. Took me out. I took a stop. No scale. Nada. Came back outside. See, this was an error for me right here. I want you to know I made an error. Yes, I make them. This was an error. This was supposed to be, I jumped the gun on this. A little FOMO. Foaming at the mouth or FOMO at the mouth. So here is the actual location for the long. Took the long, got my scale. So this is the right trade. This is an error. If you think I never make an error, anybody who says they don't make them, they're not being honest. We all make them. The idea is to make less. So that was a stop that shouldn't have happened. That happened. This is the trade. Okay, to there. Now hold, and I'm going for yesterday's high, and I have targets above. I haven't showed you the targets too much. I got to show them to you. Upside target is ETH high, 5600-ish, and this, 5611. So these are our targets for the day, not trade recommendations. Who knows? So, hold on, let me look here. Okay. So this is the long, this is the scale, and then going for higher target. So let's watch. Looking good, Lewis. The next target is yesterday's high value statistic, and then 56-ish. Well, this, I mean, overnight high, and then 5,600, this, and then that. I don't know. Where are we anyway? Did we get there yet? I don't even know. Oh, okay. I don't even know where we are. Let me look to see if you guys have questions so far. Yeah, Eddie, what is that? See the percentage of what's on percentage on what, Eddie? By the way, if you're in YouTube, thanks for visiting Trader Lab. Please give a thumb up. Helps the stream. But also, I did post, if you didn't see it, a link. Steven, can you check that link and make sure it's the mean reversion link? Because I can't check it from here without making big trouble. There should be a link at the top of the chat in YouTube, and that is a mean reversion stream I did. And you guys, if you haven't watched it, it's in the library, and this is available to Bookmap Discord Trader Lab participants. Remember, the Trader Lab is a community. There is no cost, and it's about building out the business of trading. And that stream talks about the condition of this market today. And I posted it over the weekend for Trader Lab participants to participate in. So anyway, you got your long, you got your scale, now you're long, you're holding on, and you're going for higher. So let's watch the behavior. You get VPOC migration. This is all good for the long. Now here's something that's really important. Right here, This now is the new retail price. This is too low. If we think of this as shopping, and as the volume, it's kind of like where the participants interact is like we're in your store. Think of this like a shopping experience. If this becomes too high, we can leave it. And then if we come back and we don't get over it, it is potentially still too high. This is called a fractal. I'm going to just draw a little line here for you so you can kind of see it. Kind of rooting for the longs here at the moment. And now in a higher time frame, the developing daily time frame, this is a fractal. So micro time frame, developing daily time frame. Well, we got one more target to go here. I am working towards, and this is just as an aside, this, not a recommendation. And then after that, there's more, but that's besides the point. So right here, so this is now the retail price. Let's go to fractal. Too high. Now, how do I know it's too high? I don't until I break away from it. So when you get a consolidation like this, look what you have. Chop, 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 chop. That's a consolidation. I got buyers here. I got sellers here. Who's going to win? Think of it like a battle of the bands right here. If the buyers take over here, this is too low. Let me draw a little line. Same process. We're just going to draw a little line here. So this is support. I come up here, chop, 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 same thing. But instead of breaking high, I break low. What does that tell me? Potentially, and look where I come, too low. Where do I come back? Too high. Now, I don't know. As far as I know, going north. Now, the same thing happens in a higher time frame. And I'm not just from a semantic point of view, the clock has nothing to do with this. It is fractal. So fractals are just behaviors without a time frame, without a clock being imposed. I use the volume profile as participant based. That's what creates the volume, not the clock. So this now might be too high. So that's too high. I break low. Now, what would have been nice is to break high. I break low into support. So here's what I have. Resistance, support. Resistance, support. Resistance, resistance. So let's watch this thing. So right here, if I'm managing the trade, it could be under here. Or I could be out of the trade right here. When it breaks low and can't get above here, you could be out of this trade subject to your plan. And again, I always say it's subject to because you have to work this out. So now what? We come down here. We take this out. We take out this low. Remember? So now what happened? Instead of being now directional, we have changed context into rotational. So here it was two-sided trade, right? So we got long, everything looking good, having a wonderful time. Yeah, we're going to the moon, Alice. I got my targets up above. Look how it changed. Microstructure, too expensive. Come back to it. I'm not paying that. Support here. Support. Come back, shift up. We want to lift off. What do? The opposite. The way I kind of think of this and this is conditional structure. So let's use, if you were going to write code, and when I built trading systems, my brain kind of went into conditions. In other words, conditional statements. If this, then that. If not, then what? If this is too high and I break low, so if this is too high, then that, break low. If I come back and I can't get over it, then what? Then south. If this is too low and I break high, so if this is too low, then that, right? So higher. If I come back and check it and I hold it, then what? Then that. If I do the opposite and come back here, then what? Then that. If this is too low and I rotate high, then what? Then there. If I clear that, then what? Then that. If I can't clear this and I don't clear that, then what? So if this, then that. If not, then what? Then that. So those are conditional narrative statements. And think of it like a triggering of a conditional behavior or structure. When this happens, it is a condition of you're going to get a counter rotation. That's the condition. Then it's either out of the trade because now that has triggered a branch logic. In other words, if this, then that. If not, then what? If I don't get over this, then what? Then south. Then what do? That's next part of the logic stream or conditional process or triggering event. Does that make sense? Oh, thank you, Stephen. Yeah, Eddie, what were you asking me about percentage? So we come down here, we take out the stops. So we've gone from two-sided, breakout, directional, looking good, to back into reversion trading. Now, what do we have? We have the overnight mid, which has, and again, you've got to vet these for yourselves. These are available in Trader Lab, about a 72% probability, and the previous point of control, about a 60% probability. So here and here, and here, of course, settlement. So once we break under, then now we have two possibilities. Come here, come back here. That's one, mean reversion. Or come back to mid and VWAP and get sellers. Because now what's happened is we found too high. And the longs that are in this leg have their stops under here. So it's reasonable we can come down and take them out. Now either they're out and now we're in two-sided trade. And this gets real funky. So let's look at it. Right here, now I'm looking at this and this. So I'm over here and I'm looking at this and I'm very, very, very conflicted. I get a microstructure here and I'm thinking, well, I have VWAP in mid as a possibility. And I have this potentially open down below. So in here, and I'm thinking about, I've got this is what I've got to be thinking about. Because if I come back here and I find my sellers, I then have the downside. So this is where I get into trouble. Right here. So I come out to the outside, I take the stops out, I'm in mean reversion. So I need to be thinking about a long. So let's look over here. I've got no long here though, but here's the volume. Break low. Here's volume. Break low. Here's volume. Break high. So here, now it's changed. So I have resistance here. I have what turns out to be support here. I come above this volume and I take a long here. And I'm thinking, well, mean reversion, I can come here. This drops down. And now, of course, I'm questioning everything. I'm going, this is going to be rough. Maybe, here, let me show it to you. Because now what's happening is this whole area now is too high. This is now retail. I may not come back here. And so this is not a good thing for me because you're always dealing with a lot of possibilities in trading, right? So this is my scale because I'm perceiving I'm in an uptrend, but this was very, very, very conflicted for me. So I'm thinking, okay, they just washed out the longs again, and now I'm back in mean reversion, and I'm back on the quote gravy train. This is my resistance. So that right there was me. So I'm going, okay, boom, scale, hold. And I'm going now for the overnight high. This. So this is my next target. I get taken out. Okay. And then, of course, I'm getting very frustrated. So where's my support? It's down here. So I'm going, okay, mean reversion. And I'm also saying a few other words I can't say here. And what I'm doing now is I'm going, well, I know where my stops are from this down here. If I come down and I get absorption, I'm going to be looking against here for potential long. Same trade, mean reversion. And I'm so annoyed because, you work real hard to get a position on. So anyway, here's my absorption. It comes into my level. I'm still conscious of this and not thrilled about it. And I'm trying to stay in the same mode, which is mean reversion. I come down here. I have my stops coming out. I see absorption. They're absorbed. Here's my volume. Here's my volume. I break high. I get long in here with a stop under here, going for here for the scale. I get my scale. I get taken out. This is the story of my day. Stop was under here. I come down here. I get my high volume. I check my level. I break high. I see my buyer. My volume is in here. I get long in here. And I'm coming back to this. Mean reversion. Same trade. And I'm going for this. And what happens? I get taken out. So far, any questions, guys? I mean, this is just the story of my morning. I hope you guys had a better one than me. How are we doing in the Bookmap Discord Trader Lab? How are you guys doing today? Kind of nasty. We still have a target open up above, by the way, around 56.11-ish. What's that finger mean, Patrick? Pointing down. Please give a thumb up in YouTube, by the way. Anyway, here's our targets, right? How do you know? How about this, guys? You don't. What you know is maybe, and it never has to go there. That's the whole thing about this. There's no 100%. You know, the only thing that I think that's absolutely guaranteed, and I can say this, is that it's completely random and uncertain. That's the environment we operate in, and it's difficult. If you don't think it's difficult, then you haven't been doing this for a while. Doesn't matter how long you've been doing it. I've been going on 45 years. I can't predict where it's going and when it's going to do it. That doesn't exist. So the only thing I can do is try to get an alignment. And in this, you can see I can get a good trade. I can get a scale. And now I'm not discussing how I manage my trades. I'm showing you the structured trades. Everybody kind of operates in their own, fractal, if you will, or time frame. It's kind of the way I think about it. Now you notice this we came down here. Now the thing about this is, why wouldn't I get long here? I'll tell you why. Let me find it. I think I have a reason for this somewhere. Is it this? Got to find where this is. Okay. Let me open this up for you guys. I just want you to see the structure. So the market comes down here. So right here, I've got some volume. I get a bounce. Now, what I do, one of the ways I trigger, first of all, these are structured triggers. You've heard of structured trades in Trader Lab. Well, the triggers are structured also. So if I open this up and I see my sellers and I get buyers above here, they were absorbed. So if they are absorbed, this volume right here can become support right in here. So when it returns, I can look at it and say, okay, these sellers in here were absorbed by these buyers. So I know that if there's absorption here, that if I come down and test this level, which is right there, that the buyers might show up again here. So right in here, I'm looking for a long. I see a seller. I see my buyer here. So right here, I'm going, okay, buyers, and if I can get above this here, I have a long scenario. I don't get there, you know. So let's watch. So here, I take a long. I got to get. So I know here that I can get sellers at the mid and the VWAP. So I always scale in front of the first obstacle. And I'm thinking, well, okay, then here's next, and then out the top. Now, there's a target here at 5,600-ish, and then there's the next one up here. So that's what I'm going for. And that's kind of the last trade for me. Now, let's come back to the structure. VPOC migration. Okay, what this is telling us is that this is the mean or the median price. And what the market will do is it'll rotate back towards this. The outside edge is out here. I'm going to mark it. And what you're going to see here is something I think is pretty interesting. It kind of fits the context of the day, and it's in a fractal. So what is going on here? Let's try to figure this out. This is a consolidation in alignment with targeting. Who knows? We leave it. We now have this one here, and all this rotation's going on. And now the retail price is here, and we're doing this. It's called mean reversion. But if the trend is up, we only want to be on the long side. And it doesn't mean you cannot be on the short side. It's not about that. Your trade plan, you can be anything you want to be. For me, I'd like to get in alignment with the advancing army. Call me crazy. Well, don't. But I'm just saying is I find that the probabilities, and especially with this up here as my target, and we never have to get there. You know, it's not about what it will do. It's what it might do. The longs are outside in. Remember, I'm talking about mean reversion. Outside in. And this is where you're going. So if you're not in this position, or you got taken out or thrown under, you know, the bus, what do we know? Too low, retail. And how does the market work? If we're inside a fractal, if the trend is up, which it is, maybe, I think we might agree, how do I trade this thing? I have to get outside. How can I read where the outside is? I can look at this. Now the market's up here. This is our retail. Most of the business is going on here. The volume point of control is here. Highest volume so far for the day. And you do notice how it's been moving around. Well, think about shopping at the store where there's a lot of volume taking place. Most buyers and sellers agree that's the fair price. It doesn't mean we won't leave it and then maybe come back to it, or reject it and return to a previous price. So there's a few ways that can operate. Here's the other way it operates. Think of this like your dollar can of tuna. I know, tuna. And it goes on sale for 75 cents. Everybody's willing to pay $1, but when it's on sale, the sellers who controlled the price, by the way, not the buyers, the sellers. The sellers control the price. If they lower what they're willing to take for it, they're going to come down to find demand. So if we lose demand up here, it's going to go on sale. And now what's going to happen is the buyers are going to start absorbing the sellers. And then they start pulling their orders up, the prices, and the buyers go, wow, it's on sale. Think about when you go to a store and your tuna can is 75 cents a can, but it's not on sale indefinitely. You buy a couple more, and then the price goes back up to retail. On the other side of that, if the price gets too high, you notice how the volume tapers off? There's less buyers. I'm not paying that, and it creates this. So if we think the trend is up, the job in mean reversion is to find an outside edge, and that's part of the joy. Where is it? It's out here. So now let's look. So right here, going to the moon, right? Everything says it's going higher. As soon as I come below, I'm now in mean reversion. If I'm trying to hold a position, my stop needs to be outside of this. It's got to be outside somewhere. And the market can come down here and then revert back. Mean reversion. Let's look at it. Now let's look at what we see. We come outside, and remember, nobody knows where. You've got VWAP in mid. For all we know, it's going to the mid, right? Because what do we know? We don't know. Let me show you this. So it comes down. I see sell stops coming out in the buying iceberg. No clue. Right here, I see, let's look at this. This is the whole thing, and the outside edge is here, right there. Now, that's not a wall. It's an outside edge, low volume. In this structure, don't you see the same thing? Where's the outside edge here? It's out here. Well, what happened there? High volume. Let's look at something. There's high volume for the whole day so far, right there. Our nature is to come back to it. If I come outside and I have high volume here, which means I'm out here, is it possible in the fractal, if this is too low, that will come back to the next higher time frame? There. There's my test of the volume, which is here. And it's at the low volume zone. So it's here, here, break high, test. This is your long, your stop is under here, you're at an outside edge. This is your scale. Notice the symmetry where it holds. This is your test. Well, didn't know we were there. But this is where you're going for your scale. Now, the idea is to get above this, get above that, and go to 11. So that's a target. We're breaking below, then you got to manage the trade. This is where you're trying to go. Mean reversion. So right now, this might be too high. You can tell why I don't like this because of these trades. I mean, I'm taking a ton of trade. Well, not a ton, but I'm trading. I have to trade actively because it's the nature of the condition of the market. So for me, long would be here, down here, but here, let's assume it's here. You're going for this or that. Your stop is under here. And then you're looking for the current high of the day. You've got resistance there. I'm going to mark it. It's based on that volume just to the left, which is here. So this was too high. You got your seller. This is too low. You get your buyer. This is retail. This is retail right there. We had our sellers. Buyers absorbed these sellers. Sellers so far, if we can get above this, we go here. If we get through there, then this is our next target. None of these are trade recommendations, but this is how you can assemble a trade plan. Now, for me, I'm only on the long side. I have not taken a short. I saw shorts, but I'm trying The thing that really sealed the long side for me was coming down into these statistics, all this. So these were the primary elements to start thinking for shorts. So you saw I took a couple longs, I took some stops, I took scratches, whatever it is, right? And this was also possible also. But I saw my buyers, and then that was it. So these were primary targets coming down. And this was maybe, it's always maybe. And now, so it's just been longs. Unless you're a shorter term trader, then you could be on shorts too. So this is so scale would be here or here on this long. Then you've got to get through this thing, and then you're looking at that, and not a recommendation. You guys have questions? Can you see the logic behind this? Even though it's not a joyous event to trade mean reversion. By the way, in Trader Lab, mean reversion, we underline the word mean. It's mean. Well, Anthony's, the trend is up. We have high probability statistics above us. If you've, I don't know if you've been listening to the top of the stream, but before the market opens, we anticipate behavior. We have opening scenarios. It's part of a trade plan in the Trader Lab that each trader develops for themselves in the time frame. The market is two-sided at the open, so it's called an open auction. Once the structure starts developing, we monitor the development and the auction. The auction is our consolidations, really, and they happen in all time frames and fractals. The statistics I give at the top of the stream. So I don't know if were you here for the beginning of the stream? Athenix? So the statistics, because we opened in the middle, we really we're in a situation where the trend is up, but we can abuse the existing longs, and it turned out to be rotational, which is very annoying. It's just very hard to trade. I take a bunch of stops in these, and I can hit my loss limit when I do, and I do, from time to time. It's in this. It's not. Typically, it doesn't happen that often, but when it happens, this is the condition that will happen in for me, because I don't allow myself to go too far in the hole, because I know I don't have my edge is not as good in this as it is in other conditions. It's just the way it is, So I don't worry too much about it. I just try to figure out if I can detect better ways to trade in it. So I'm constantly thinking about it, and I have to. And I posted this morning in Trader Lab. You got to slow yourself down when you're in two-sided trade. You can't trade it like you might in a directional move. When you recognize rotational trade, you really got to take a chill pill because you can run out of bullets easily. Trying to, buying a little rotation and getting popped. Very easy for that to happen, and you do that 2, 3, 4 times, and I don't know what each individual trader's loss limit is, but you could be done for the day, and still the day offers opportunity if you're more patient. I just find that I have a specific trade plan for this, and in that trade plan is the word patience. I also remind myself that I can hit my loss limit before 9 a.m. in this kind of condition, which happens, and that's because I'm not patient. Because what we're trying to do is get in alignment with the condition, and so that's why it's conditional behavior. So the condition might be going up at first, then once the structure or triggers that I have identified, and they're in the 60 PDFs of structured trade. So this is a structured trigger. And once I see a trigger, then I know that if I don't come back, as an example, this right here, if I can't get back above it, then I can anticipate that. Now, I don't know where to. Maybe only back down to the last place the buyers were active. But then I can look over here, and because I know what happened, and I saw there was absorption right here, buying iceberg. And now what happens when I come back here? Well, if I take it out, then it can possibly, once I take it out, then I know there's stops under here, there's stops under here, and there's stops under all these swings. That sets this up, and then it's what happens coming the other way. So I don't know where these outside edges are. I do know I want to be long. That's all I can tell you. But the problem is from where. But we do know this is too high, and this becomes too low. And what helped me with this was this. So, and again, I don't know that we won't come down here, but I do know that we're leaning north. So, and we got through yesterday's high over here. So do I anticipate this? Absolutely not. When I have this, what do I anticipate? Trade management opportunity. When I come out here, no clue. I come back here, I see my buyer. So right here, this is where this changes. Right here, you got your sellers. I get my buyers here. So I know right here, if I can't get over these guys, and they don't at first, then we can continue lower. Right here, I see my volume, and I break high. So right in here is a long. And you're going there. So there's enough range, and the stop is not outside of my risk parameter. And then it's north. Where are we anyway? So, and this is a long mean reversion. This is called mean reversion. So once we know we are heading north, we're over yesterday's high, I have no reason to get short unless it's I trade in this time frame. And I got to tell you, for me again, if I have a target here, and why is this important, by the way? What is this all about? The last time we were up here, this was the high volume. In other words, think of it like shopping. They were willing to pay this. And then the participants said, this is too high. And they left. And we went all the way down. Friday's highest volume price was here. We checked it, and now we're back above it. What is left? There, to check that. And it doesn't have to. That's not the point. The point is, if this now is the retail price in a fractal, this is the same as that. This one is developing, and this is retail. If it goes on sale, it can come back to retail. If it gets too high, it can come back here. So it can do this. It can fall out and come back here. I mean, it can do anything. Or we continue to look for and what's too high. And last time we were here, this was too high. So that sets up mean reversion trading outside to here, to there. Not a recommendation. That's our current trade. That's Trader Lab trading. Hope that answers your question, Athanese. And by the way, if you guys are visiting in YouTube, thanks for visiting the Bookmap Discard Trader Lab today. It is a community of like-minded traders who have come together. It's about the business of trading, building a business, career plan. Trading is not a video game. It's very much a business. And I think many retail traders really, I don't think, understand how this business might work, or at least the way to get your brain wrapped around what this is. If our model that is extremely successful that we operate as a template is gaming, or how casinos operate. They only play games with a statistical edge, and they don't vary the inputs. And this is where most retail traders have a problem. They throw a bunch of spaghetti or lines or something against the wall, but they're variable. So it's almost like making a stew of different stuff, but it's not the same. You can't have a consistent recipe or outcome, and you cannot determine if you have an edge unless you have anchored inputs. And I did a primer webinar on this. It's available to all of you in the Bookmap Discord Trader Lab. There's no cost, by the way, to become part of the Trader Lab community. There's over 30,000 views of this primer webby. It's about an hour, but it gives you a high-level overview of the business of trading, the fallacies, the things we come into this. If you're a retail trader, what you think it is. It's not indicators and time frames, and you get an ATM in the basement. It's not this business. It would be nice if it was. Then all these retail traders who walked in your shoes would have ATMs, and most of them, I think, don't, based on the statistics. So the idea is, what process does work? How can you replicate it? How can you know that when you step into the market, you're actually operating with a statistical edge that favors you versus the other participants? Now, remember, if you were to roll the dice, you win sometimes. If you flip a coin, you win sometimes. The thing about winning, we all win sometimes, even if we have no edge. It's just part of the random outcome. You could throw a dart at the board or ask your magic 8-ball, which I used to do when we sat on the trading desk. Never got a good answer, but you could ask your magic 8-ball, should I get long or what should I do? And it's going to be right sometimes. Do you build a trading process and a career around a magic 8-ball? Only if it works, right? But if it had an edge, you could, but it doesn't. So what we see as something that has some kind of, we recognize patterns. Our brain is, we're very good at patterns. The problem is we can tweak and tune a pattern and then think that that pattern has an edge. But if you're using random inputs, you don't have an edge. You have randomness, and random in, random out in a random environment gives you, unfortunately, no edge. And there's an old term from the computer world, which might be antiquated, outdated. There you go at this point. Garbage in, garbage out. So how do you differentiate? Trader Lab is about building a business based on statistical probabilities or edge. How do you manage your emotional states? It's by having a statistic for this. If you understand how the market works, you would know this is your trade. You would know this is called mean reversion. In a fractal, you would know that this is your target because you understand market mechanics. How does the market work? Why does it do what it does? Maybe. And how do you participate in a random environment? Well, statistics, vetting, and only interacting where you have an edge, just like the casinos do. And yes, the casinos pay the gamblers. It's called overhead and cost of production. You will have losing days. You will take stops. You will hit your loss limit. Whatever can go wrong will go wrong because it's a random outcome. The difference is if you have a statistical edge over time, you will extract the dollars, assuming you can execute. And that's where the emotional. Here's something for you. We are all fearful because we're wired to be fearful. So don't worry about how you feel. We all feel the same way. But if you knew that if you take along here, you have a 65%, I'm making a number up, a 65% probability of going from here to here. What does that do for you in managing your fear? Does that help you? If you know if you can get long from here to here, and you can keep your stop under here, and the worst that happens is you scratch because you're going for this, what does that do for you? Does that allow you to not move your stop and micromanage or bail out when it rotates back here, even though you may scratch the trade because you know over a large sample size that micromanaging where everybody else puts their stops, it does not give you an edge? What gives you an edge, not over the last trade, but over the last 30 or 50 of these exact same conditional trades, is not to move your stop, to let it take you out so your broker, so you scratch and your broker sends you a gift basket. But in the end, the edge is derived by not doing what other retail traders do who are managed by their emotions. Why? How can you do that? if you have statistics, now you have control over your fear. Is that something that makes sense for you? Let me know. And if you're watching in YouTube, thank you for visiting Trader Lab, and please give a thumb up down at the bottom. Pete, I can't go into those. They're in the Trader Lab. Pete in YouTube is actually about the opening rotation sheets. I posted 5 opening rotation trades or structures. They're not trades. They are triggering structures to help traders. For example, when I was developing a lot of this stuff, and I've been doing this a long time, it's going on 45 years, but I would open my trade plan to the open. And in the open, I'd have all these structures laid out. I would have the things to be on the lookout for. And I would also, and there was more, of course, but also where do we open in relation to the previous day's range, which you saw, that's where those statistics came from. At the top of the stream. So when if you're in the Trader Lab, this stream is available exclusively to Trader Lab participants to review. And you guys, and if you're in Bookmap Trader Lab, of course, this will be available. And if you're in YouTube, there's a link in the bottom of YouTube. You can stop by, visit the Bookmap Discord Trader Lab community. There's no cost. And it's a 24-hour, 7-day-a-week community of like-minded traders who come together to leverage their collective experience. And it doesn't matter what you do, in the sense of, doesn't matter if you throw a dart at the board and you got an edge with it, let us know about it, because we're all looking to get better. There's no one way to trade. The thing we do know is that most of the things that retail traders do not contribute to longevity in the business. So some of that has to do with taking what you've learned, assuming you're not a consistently profitable trader, taking the things we've learned, and we all have the same education along the way. However, I also coined a phrase because what happened to me was I would always be trying to make something better, and I thought it was persistence and hard work. I didn't understand the difference between a process that's not in alignment with this business and my beliefs. I believed that my indicators or systems that I built at some point, years back, that I could conquer this by persistence, tuning, tweaking, making it better. And that's no different than what you do if you see behavior in the market, an oscillator crosses over an RSI, or you got an envelope or an anchored V. It doesn't matter what it is. Everything works sometimes. But you should only be executing trades that work with an edge. So the random inputs do not give you an edge. They actually give you randomness. And randomness is gambling. Go to the casino, have a let them give you the cocktails and a ticket to the buffet, because you don't have an edge then. You're just a gambler. And it's okay for entertainment. If I go to a casino, which I don't need to do, but if I do, I go with a certain amount of cash, and for me it's entertainment. I don't expect to win because I know I don't have an edge. Now I can get lucky, and luck is part of it, but luck is not a sustainable business model for most, okay? So it's really about edge. So and I coined the phrase for myself called Trader Groundhog Day, because I keep waking up kind of going back and to fix something and to make it better, to fix it, persistence, Trader Groundhog Day. Because that's when you get the aha moment, you get excited, everything looks great, you trade it, you get some winning trades, you get some losing trades, and then you see yourself going backwards. And then you go back and you tweak and tune it again. Well, Trader Groundhog Day. That doesn't work in this business, because typically you're not doing it on one structured trade, or one setup, you're doing it on many, and you now have a collection of Trader Groundhog Days. And that is not a sustainable process to have a career in the business. Again, just my experience, but if you have that experience, then you might want to visit Trader Lab. So we're still hanging in this long. Now, let's look a little further. And if you have questions, take a look. By the way, if you come to Trader Lab, those, I think it was Friday, those opening trades were posted. And also there's a link in there to the mean reversion. webinar I did. It's probably from, I don't know, last year or beginning of this year. And also I posted it in the YouTube channel there. So if you guys want to look at this, I really suggest, if you want to understand what's going on here, because this is a separate trade plan. Now, what's confusing naturally is what trade plan are we trading? How about this? It was two-sided trade. Now we're in a directional market, so longs. But how do you trade longs when it gets rotational? How about mean reversion trading on the long side only? Doesn't matter, by the way, if we hit too high and then we come down and take all of this out. I would not be getting short. I'd just be looking for longs. If we actually, I can tell you our next trade, my next trade, not a recommendation. If we take this out and come out here and all we do is flush the stops, I have a long here in this area, I have a long here, and I have a target here, and I'd still be going out the top because they're structured trades. Right now, the last long is here to there, right? Scale, and now helmet, and the trade management is way out here. Not here, not here, not there, not here. This would be the most aggressive I would get, would be here. And I can still come out here and take this out, or I just leave it under here, the point of entry, and say Laguerre. And that's another piece you as an individual trader have to vet. Can you guys see why it's longs only and why this is a fractal? In other words, this is the condition we had this morning down here, except it was two-sided down here. Now it is two-sided, but since the trend is up, it's long side only. Can you guys see why it would be longs only? Now, I'm not saying it won't be shorts for you. I'm talking about my trade plan, but why you might favor the long side, everything you know. Does that make sense? Yeah, Patrick, yeah, Patrick, you're not the only one. Just my turn some days. Today's your turn. Yeah, everybody, you should be working on mean reversion. I think you'll find possibly that it is the more difficult uh, condition, and it's always about where's these outside areas. So you have to be very patient. Really, it's really, and I have in my mean reversion plan, if I could, use a cattle prod and a branding iron on my arm, it would be patience. That's the most important component, because you can just hit your loss limit because you're trying to pick these outside edges. So you might try it, one place, you get whacked. You try it again, you get whacked. And if you're too impatient, you could be 3 stops, 4 stops, and in a half hour hasn't even gone by yet. So I'm very cautious with it. And what I've found for me is that there's so many structured trades in the Bookmap Discard Trader Lab that I don't need to be impatient. If I get impatient, it's my FOMO. I have to really be honest with myself. Was it really, or did I just see a ripple? If I'm in two-sided and I don't get the low out here, wherever it was, which I got, but, out this thing. Suppose I couldn't get this and it runs all the way away. Do I have another way in? Yeah, I do. I do. I do have another way in. Am I willing to sit and wait for the next trade or this one out here? See what I mean? If I have to sit through this and my FOMO is going off as a professional trader, do I react to that? No, amateurs do. What do I do? If I react to it, it's an error. There's something I've talked about, and it's in the Bookmap Discord Trader Lab. It's called the error cost calculator. I made it up. I don't know if it was 2000. I don't remember. 9, 10, 12, somewhere. I don't know. And what it was is emotionally, if we make errors, FOMO or whatever it is, whatever it is, move to stop, bail out, all this stuff. What effect did that have on me financially? Never mind psychologically. And what about my bad habits? So I started keeping track. What I found out was I was leaving $5,000 to $20,000 a month on the table by errors. So instead of looking for the next great setup and ignoring it, I quantified it. And then to make it even more enjoyable, I got a checkout and I wrote a checkout. And basically I wrote, well, I won't tell you who I made it to, but let's just say I picked something or somebody or an entity that I was not fond of. And I realized I was throwing the money away. And I would have been better off giving it to a charity or something. I put that on my monitor. So, and I had to look at it every day. Because what I did is I quantified my behavior. And it motivated me. Because I said to myself, well, I've already got these profits. I mean, how would you feel? Let's just pick a number, $1,000 a week, $4,000 a month. Doesn't matter what the number is, $500, $2,000. When you put those kind of figures in front of yourself and you realize that you have control, you don't have control over the outcome, what this is all about. You do have control over yourself. If you don't have control over yourself, that is maybe the shortest distance to profitability, assuming you've done the work, you have a vetted, structured plan that has an edge. If you take the time to build it out and have an edge, then your job is to execute it. How do you rate yourself? Is it P&L? No, it's execution based on your plan. You can always change your plan, but your job is to only interact when you have an edge. That's the business. I hope that makes sense. How are we doing with our trade here? So this is our last long out here, right? So this is a long. Is there any reason that you wouldn't take this trade if it was one of your trades? Would you have micromanaged it over here and get it taken out? You do know, if you followed the auction, that this is too low. And you do know in the shopping experience that you can't buy an S&P here anymore. A variable high volume node. You do know that. So if you know that, and that doesn't mean it won't take it out. This is not about what it will do. It's about what it might do. Where would you put your stop? Would it be there? 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 Would you micromanage because of FOMO? Because you might give it all back? And you might? What gives you the better yield over many, many interactions with the other participants? Is it bailing out here? Maybe. If your trade plan says this microstructure is too high, let's mark it right now. Do you exit? I'm asking you because my plan might not be the same as yours. You may have a better plan than me. There is no such thing. It's your plan, you see. It's not what I do. I know right here these buyers were absorbed. I know the volume is right there. I know the high of the day is right here. And I know I can come back here because this is what? Mean reversion. What is it? Mean reversion. What is it? Mean reversion. Or this structure here is support, because that was resistance, old concept. Now I have high volume here and I have high volume here in a fractal. Let's look and see what it does. This is what I do. And it's not complicated. Is this complicated? Now, what is this? What am I doing here? What I am doing is reading a language. I'm interpreting, I don't use indicators. So what does your indicator do? It is a translator. It translates price or some derivative of price. That's fine. I'm doing it right here because I know what it says. I don't need a third-party translator. And then I don't put 5 translators on that do different things that can conflict with each other and create paralysis by analysis. I know what it says. I don't know what it'll do. Neither does do your indicator. So we're all even in that sense. But I can see it here. So I know what is here. I know if I can stay above this and get through here, I'm doing what I'm trying to do here. You see this little volume? That volume in the micro fractal is the same as that volume, which is from the last time we were up here. So I am going for this using the microstructures and the fractals in the developing time frame. Now, when we talk time frames, again, I always repeat this. I don't use the clock because the clock has nothing to do with this other than the open and the close, pretty much. So what I'm using is the participant behavior. So when I talk about fractals, I'm using multiple time frames, but I'm using them differently. I know this is too high. I know this is too low. I know if I don't get above here, I can come here. I'm doing the same thing in all time frames. I know if this is too low and this is too low, and I can expand above these buyers who were absorbed by these icebergs, I can continue on to my target. So my options are trade management or just stay the heck away from it and let it ferment. It's like a wine. Are you guys tracking? Is this making sense? This is Trader Lab. This is what we do. I'm not saying it's a way to stay in alignment or attempt to stay in alignment with the market and use auction structures. Remember what the market is. The market is not your indicators. The market is participant behavior. And why do we have a market? Let's go back to the real basis of the whole thing. We have a market to figure out what's too high, what's too low, and what's retail or fair. So this was the last time we were up here. This was a price that was fair that became too high. And we went all the way down to wherever the low end of the spectrum is, as we did the Acapulco cliff dive. The market tends, in all fractals and time frames, to come back to previous locations to check. Now, if we get above here, right now, this is as far as I want to go. Doesn't mean I won't go higher if I have other processes. But for this, I know if I get up here, there's fuel, and we can accelerate up here. There's also a little something I want to put in the back of your head that I've spoken about in the stream a number of months ago, and that is developing blow-off top. If you don't know what a blow-off top is, it is a market condition of excess. The market is anticipating the Fed rate cut in September, right? Is it possible that we might have an event coming up, and I'm not making a recommendation, that the timing of the rate cut might have something to do with the condition of the market? Just saying. And it's not a recommendation. You should be researching and going back to look at different markets that have a blow-off top. A blow-off top is excess, and there's typically very high volatility from both sides battling, and then you get the extreme. You see them often in commodity markets, gold, silver, stocks, of course, whatever. You can find them all over the place, but they're extremes. And both sides get battered pretty well, and then one side, in this case, the longs, are going to get trapped at the top. We don't know where the top is. Nobody can call a top. But what you can do is, if you've been trading for a while, and I've seen this a number of times over my career, going on 45 years, this smells, if you will, like that condition which has been developing. So something for you guys to do on the weekend. blow off tops. Research them, go to Wikipedia, and get examples of them. And then compare it to the behavior you've been observing here in the last few months. I think you'll find it very interesting. These kinds of behaviors, if you haven't been around the trading business for a while, it's important that you understand conditions, potential. Nobody can pick the high, so don't think about that. But if you find yourself getting swept up in euphoria, in the thing of let's go all in, it's going to the moon, that's when no, it's not going to the moon. It is getting the final buyers in. That's what extremes of behavior are. That's what makes these extremes. So you can go back like to the COVID low. You can go all these different areas of extremes. So you want to look at extremes. Commodities have more behavior than that, but I think you're going to be seeing it. Look at the NQ, go back to 2000, go back to 911, go back to Desert Storm, go back to historical events, and look at the charts and look at the behaviors. Be familiar. That's all I can say. And in Trader Lab, we've talked about this extensively. Any final questions? I've got a couple of minutes left. I'm going to just flash something up here at you. This is what these PDFs look like. You can download these. There's no cost. It is going to show you these structured trades with some explanations. Some of these are just screenshots. These are actual trades I took, and these were done, quite a while ago. I'm not a vendor. There's no course or anything. The Trader Lab is a community of traders, and it's about leveraging our collective experience. And you're all invited. There is a link in the bottom of YouTube. Now, let me ask you a question. This is a structured trade. Can you learn this? Is this a trade that you would want to have on? Would you understand this if you come to Trader Lab? And while past performance is never indicative of future results, we all know that this is a structured trade. You'd be long from here, and this is the trade. Is this something that can work for you? This is Trader Lab. And again, past performance is never indicative of future results. This is our target. And it's not a recommendation. Market never has to go there. Market can go through here. It's that part. It's just like horseshoes and hand grenades. So as we come up here, for me, on my long, I'd be managing this trade because we can exceed it. And I have no problem if I get out of the trade a little ahead of it or at it or behind it. There's no precision in trading. Please give a thumb up in YouTube, guys. Support this channel. Let me know I'm doing a good job and that you're getting something from this and that Trader Lab is giving you something different, something that maybe you can learn. And maybe being in a community of like-minded traders, and we have our senior trader has over 50 years experience, everybody has something to bring. Kind of like going to a party and they say, bring a dish. Bring your stuff. And it doesn't matter good, bad, indifferent. There is no such thing. You will be surprised. The thing is, if you walk in the retail trader's shoes, all of us, at one time or another have done exactly the same thing. You can learn from what others have done. We've all paid tuition. You have too. The question becomes, do you want to keep repeating the class? That's Trader Groundhog Day. Now, for me, this trade could be over right here. Do I care? Doesn't matter to me. So I can sequentially manage this trade. So let's look. Too low, too low. See the buyers? I had a seller here. Right here, I had absorption. If this is too low, I can anticipate the buyers who absorb this seller are going to be activated in here. This now is too high in the microstructure. So we're just going to look at this for the last couple of minutes, okay? I just want to show you and why. So the buyers absorb this guy. If the buyers have an appetite, if it comes down here, they will be activated again. The buyers were active here. My stop should not be here. It should be under here. I'm looking for the buyers who were here. Now you see a red bubble. What is that? Market orders, delta. If you see market orders and the market doesn't go down, it is absorption. This is how order flow helps you. This is where the buyers were in control. You got to be under here. Now what? This was too high. There was absorption here. This is my resistance. Support, resistance. I don't use an indicator. What do I use? The participant behavior. What is the truth of the market? This. This is a language. How do you learn to speak a foreign language? Practice and intentional practice. Drills. You want to be a high-performing athlete? What do? Practice. Screenplays. And what else do you do? If you're in Trader Lab, you don't put a live trade on until you determine where your edge is. You only need one trade that has a statistical edge. What that will do is create a template for you to reverse engineer those 60 PDFs that I share of structured trades. Plus, in the Trader Lab, the community shares screenshots, discussions, interaction, mutual support, leverage. It's leverage. We all are trying to get better. And I mean all of us. If you're in this business, doesn't matter how long you're in this business, you're never done. You're just never done. You're always going to try to get better. I am always trying to get better with mean reversion. It is my poorest yield for numbers of trades. It is still profitable, but along the way, I had to work out very carefully because I can hit my loss limit. And of course, that's not pleasant, especially once things kind of simmer down, you can get on, like this last long, wherever it was. I don't remember. I think it was down here, right? This is the last long, right? If I hit my loss limit, I don't get this. And this is where the payday is. So I had to really work hard on patience. Please give a thumb up in YouTube. Remember, there's a link in the bottom of YouTube, and this stream's available, exclusively to Bookmap Discord Trader Lab participants to review. This will not be published. This is exclusive for Trader Lab. There's a link in the bottom of YouTube. There's no cost to join the Bookmap Discord Trader Lab community. There's also a lot of additional education that Bookmap server provides. Stocks, options, crypto, order flow, of course, with a high-tier tool like Bookmap. Swing trading, options, market maker behavior, and a lot more. Also, there's the Bookmap Academy, where you can get individual mentoring, coaching, and so much more available. And if you're interested in trying out Bookmap, there's a free digital version that you guys can check out. Click the link in the bottom of YouTube. It'll take you over to the Bookmap Discord Trader Lab. Say hi. Download some of the resources. Access the library of webinars that are exclusive to Bookmap Discord Trader Lab participants on this process if you found today interesting. Thanks again, guys. Remember, our target was around 11.25. As far as I'm concerned, this is like a direct hit. I use the term horseshoes and hand grenades. Thumb up on the way out, guys. Thanks again. Look forward to seeing you tomorrow. And have a great day. And thanks for visiting the Trader Lab.